Hello, Warriors. How's everyone doing today? I'm Dale Pinker with TradeGATEHub.com. We're powered by TradeView Markets, and I want to concentrate with the dollar making new highs up here over 107. Just want to show you on the 2-hour time frame that we could have a little three drive here. There are some counts about 107.30 to 108 for possible peaking action in the dollar. When you look at it on the daily, we are still diverging. Need a down day to not blow it out. The highest momentum reading is all the way back at the end of April. So, for about 2.5 months, we've been diverging. This upside push, I went a little further than I thought it would for 3. So it has to do a little work and distribute. If you look at the 4-hour, we're holding 70. So it's not ideal. Same type of thing. The 2-hour at new highs will be a little bit above 70. So, if you're not going to be outright top picking, I would say that it's a good time to take profits on long dollars. My preferred long in the dollar, and Lewis, I'll get to the euro and levels. You could come in here and ask questions while I'm streaming and post them in our main room at TradeGATEHub.com, and I'll answer them. But I want to show the Aussie, okay? And we have to break out our telescope. So besides being above the lows with euro making new lows, or at least retesting them, and the pound getting a little bit of a relief bounce after the resignation of Johnson, I think he had to resign because of his haircut. Anyway, I want to, and the Aussie, I want to show you guys why Aussie is my preferred long. And to do that, you have to go the weekly, okay? So when you look at the weekly and you go back to the COVID low, all the way back down here in April, look how little Aussie has really given back in comparison to euro. Look at the picture. Completely different, took out the COVID low. Cable. Almost on the verge of doing it, but setting up a possible 3 drive at, maybe the 180 level. So, most of the currencies against the dollar have really accelerated and been strong, yet you look at this, and this whole thing looks corrective to me. So on a relative strength basis, and you look at Aussie, I was expecting this line. I've had this return line drawn for probably 2 months. And, we got to it here, had a nice bounce and didn't quite get to it. And here we are again. And shorter term compared to let's go with a 4-hour. So here was the last confirmed low, which it really wasn't. Again, you have to go back to June or for the last confirmed low with momentum. But we made marginal new lows after this low and had a nice RSI reading way above 30 and didn't quite make a new low here. So Mo is starting to build. Of course, everything could happen and we could have one more washout to 65.5. But this is going to be my preferred long against a dollar for a dollar turn. And the weeklies tell you why. That Aussie has been correcting while euro and cable have been giving it all back from COVID. So let's talk about a few levels here in euro USD. So of course, the major level, and this is something I talked about on Monday, on the 4th, that thought eventually we were going to take out this 103.50 level, which it's done, and by quite a bit, not a stop hunt. If you want to be conservative, you just wait for closes back over this, take a screenshot over 103.20. Here it looks like you don't have the same type of strong RSI structure. Look at this RSI structure. So this is really a comparative broadcast between the euro and the Aussie. Look at that. The structure is so much different. that I could have levels for buying the euro, but why do I want to buy the weakness? And also, for me to want to buy the euro, I have to be positive on what's happening here in euro pound. And if you look at what's happening in euro pound, it had a couple of attempts of breakouts over the 86 level, and it's pulling back. But even the euro pound right here is not going to make new lows. I mean, we're so far off the lows. Look at this. There's your weekly. So really, when you look at this, even compared to Aussie, this is a very strong pair, right? So here's Aussie. Right? Here's the weekly on Aussie, but euro pound, here's the weekly. Maybe we pull back to 84 and correct this. It was basically 82 to 87. That's 500. Take 60%. That's 300 from 87. It's going to give you around 84 or so. So I want to see the euro pound rather than looking at levels, Lewis, on the euro. When euro pound looks to be digging in its heels on a pullback here and ready to head back up, because if we take out this level here at 87.20, which was a 200-week moving average, then you're talking 92. So this is really a nice buying opportunity setting up. I don't think we're there yet, okay, but we could be there in Aussie. So, with Aussie, what you do is you just, reduce leverage and get long here. And if you want to, you just, you put your stops like about 50 pips under the low. It's not a big risk. And perhaps we're going to make at least a move towards 70. So watch this dollar index. We could be putting in a 3 drive here. 1, 2, 3. It's so one-sided right now, the Dixie. The last time, I think euro's in single digits, yen's in single digits, Aussie's way down there in single digits. And this is a pretty good performance with Aussie being up 50 pips and the dollar index only being down 3 at the current time after making new lows. So that's what I wanted to point out regarding currencies. Very important action that we're getting in the 10-year yield here. I want to go over that. It's important where it held. It's basically the whole ball of wax on yields. And I talked about yields coming back. This was a Fed day. We peaked on the last Fed hike. I do believe we're going to have another Fed hike this month, late this month. The CPI number is going to be the biggest number next week, although NFP could be a market mover. CPI, of course, is going to be magnified. So I'd see 2 scenarios. This was a pretty important, pretty high reading of momentum at the highs. So I could see us possibly putting in a head and shoulders. This would be your left shoulder that developed in May, with the head here and the bull bear line in the sand is 272. And we either blow to new highs. A few weeks ago, I had Fed guy on, Joseph Wang, and he's looking for 4 to 4.25 on the 10-year by year end. So that would support this being a very important low and another run in yields coming to take out these highs. The other scenario is it's a failing rally up around where the shoulder is, which is about 320. So we'll see what happens up here at 320. And that also really parallels with what's happening in the yen. The yen has been much more muted. Look at this pullback that we had in 10 years. In fact, I've seen comments that the way the 10 years trading in the US is the way that debt markets trade in banana republics. So here's your yen. See how much muted it was? I would have expected much more downside in the yen with yields dropping like that on the correlation. That's not happening. It's kind of a mess up here. We've just been moving sideways, and I think you could use this support line that I've had drawn a couple weeks ago, and back under 135, the yen has issues. Okay, and it's still possible maybe the yen could eke out another high with yields, but I'm suspecting the possibility of that this was a high could be true. At the most, I think we just get some type of retest over 137, and this will be looked at as distribution with one more spike. But definitely the yen held up much better during yield declines. All right, so let's talk about copper. Having a huge day to the upside, and you guys know that up here, I was talking about copper and talking about Freeport-McMoRan as being a top and a short, and what a short Freeport was. Look at that, from 52 to 28 in about a month and a half, 2 months. Looks even more dramatic on the daily. I wouldn't be short there. If you look at copper now, we're right there at the 200-week moving average. Check it out. See that? Went right through it. Okay, so we could have pretty good bounce. Of course, for copper to turn good again, most technicians will be looking at this $4 range is what the market's going to have to penetrate to reinvigorate a bull market. Gold really fell apart. I don't know what to do with gold and the silver. Silver has a little bit of divergence on the daily. Maybe we have drive 2 setting up here. I've heard targets down to 1750. 19 is important. I talked about on my broadcast that I didn't have any leveraged positions. I missed the short side and just stayed with my miners, which I'm taking losses on. But I just want to show you that something that's interesting is, even though gold was down sharply yesterday, we had a nice little turn in B2 gold right here, had a nice little reversal day. So the shares were lagging during gold strength, and now during gold weakness, they're starting to show themselves a little bit. GDX, same thing, you know, diverging. A lot of these are diverging, and you know, this could be drive 2. And actually, the silver stocks, here's First Majestic, glaring divergence at new lows, and even some of the juniors. So I'm going to stay long-term on things I'm not leveraged. Bought some more of Endeavor at 290 yesterday. We took out prior lows, but look at the glaring divergence here. Same scenario with Fortuna. Took out the prior lows, but look at the glaring divergence here. So I'm just going to stick with these and give it time. It's not an option, so I don't have to worry about time decay. Still bullish and accumulating miners, but I've seen calls in gold for like 1560 and 17.5. Silver, but if we're close to a Dixie top and we put in a Aussie bottom, that's not the environment I want to be short precious metals in. So while we were going towards making lows in Aussie, making lows in euros, making new consecutive new highs after new high in the dollar, that was fighting a headwind. Should the dollar turn, and when I have confirmation of that happening, then I'll be interested in stepping up with some type of leverage position. I want to cover oil because when up here we were probing and protecting, and then here shorting it, looking for important support to take to be tested at 94. That seems to be happening right here. I don't think it's a good sign that we got back to this major support line, and you have confluence with the moving average here as well. Under 94, you're going to have a pretty big break. That's how a lot of guys can project $60 oil. So big update today. I don't know, maybe Putin's doing something. I'm not sure. Maybe there's a fundamental report. Natural gas has been pretty ugly, and getting back to the S&Ps, they're acting okay. I think a lot's going to really hang on what happens with the CPI next week, because I still see a formation here that looks incomplete. Not that I would short it. I'd be, if there was a break to one more new low, I'd be interested in equities. Biotechs are looking good. Mike can't be here today, but some of the Chinese stocks are looking good. So if that happens, but I did want to show, looking at some of the bearish ETFs, that there's still a possibility of this being incomplete, that maybe this was drive 1, drive 2, and if we get one more drive up here to new highs, that would imply a new low in QQQ. So this is a quid, it's a double bearish. And here's the short Dow. And a little more extreme pattern, but you know, we could make a new low in the Dow. We could make a new high for a 1, 2, 3 here as well. So being cautious into next week. One thing I could say is I know there's nothing but bearish stories on crypto, but we could be carving out a higher low and get some type of relief rally, maybe back to 25,000. But when I look at the RSI, what does that imply? So are you there, Lewis? Jay, what do confirmed lows in RSI imply? That's correct. That it most likely is not the low, it's just a low, because price and momentum confirmed. So just a quick review, like Aussie, use reduced leverage and just hold your nose and buy it. Your stop is, say, 50 pips under this low, which was 67.5. So it's not a tremendous risk, especially if we're on the verge of turning this thing around. And here's the look for a possible breakout, would be this line right here. Barely clear. Let me draw another. This ballpark. So falling wedge in Aussie, I like it. And that implies if we break out over this, call it 70 and a half, 72 is next, and then up to 76. So give me a Forster's, because I like the Aussie. I'll be drinking Forster's over the weekend with you guys to celebrate Aussie and a potential low in Aussie. So that's a wrap, and Mike will be back with you tomorrow. Welcome you into our trading room. Did that answer your questions, Lewis, on the levels in euro? We want to look for a turn in euro pound first before we consider it. Okay, and I think it could be next week. Just my best guess. So remember, don't just count your pips, count your blessings. Check out our platform at TradeView Markets, and I'll be back with you next week. Hope you enjoyed Harold Malgrim, and hope he's wrong about Putin's philosophy of escalating to de-escalate, and his belief that you can use nukes without it being the end of the world, but just to create so much fear that it brings people to the table. Hope that Harold's wrong about that, and everyone have a great weekend. I'll see you next week.